Welcome to Tradiverse Insights. In today's deep dive, we're revealing something that could completely transform your Forex trading results, the best time to trade Forex and the deadly hours you must avoid. Whether you're a complete beginner or an experienced trader, understanding Forex market timing can make the difference between consistent wins and endless frustration. But here's the shocking truth. Most losing traders aren't losing because of their strategy, they're trading at the wrong time. So, in this powerful episode, you'll learn when to trade for the highest liquidity and best risk reward, when the banks and institutions trade and why you should follow them, which hours are absolutely dangerous and must be avoided, and finally, how to build a perfect trading schedule that fits your lifestyle. Let's unlock the timing secrets that professionals don't talk about. How Forex market timing works. The Forex market is open 24 hours a day, 5 days a week. But don't let that fool you into thinking all hours are equal, far from it. There are periods of high activity where currency pairs move fast and clean. And there are dead zones where price barely moves or whips back and forth unpredictably. Understanding these market cycles is step one in mastering Forex. The 24-hour cycle is divided into major trading sessions based on global financial centers: Sydney, Tokyo, London, New York. Each session has its unique behavior, liquidity, volatility, and opportunities. The market's rhythm is shaped by business hours in those regions, bank and institutional activity, economic news releases, trader psychology across time zones. If you blindly trade any time of the day, you're likely walking into traps, especially in low-volume periods when liquidity dries up and spreads widen. Overview of Forex market sessions. Let's break down the 4 major Forex trading sessions. 1. Sydney session. Time: 10 p.m. to 7 a.m. GMT, 5 p.m. to 2 a.m. EST. Lowest volatility session, good for AUD and ZD pairs. Best for beginners wanting slower markets. 2. Tokyo session. Time: 12 a.m. to 9 a.m. GMT, 7 p.m. to 4 a.m. EST. Asian currencies are active: JPY, AUD, and ZD. Modest volatility. Often sets the tone for the day. 3. London session. Time: 8 a.m. to 5 p.m. GMT, 3 a.m. to 12 p.m. EST. Most active session covers EUR, GBP, CHF. High liquidity, tight spreads. Ideal for most traders. 4. New York session. Time: 1 p.m. to 10 p.m. GMT, 8 a.m. to 5 p.m. EST. Second most liquid session, USD, CAD, gold, oil highly active. New York-London overlap equals highest volume. Best times to trade Forex: maximum opportunity. Now let's talk about the golden hours, the periods when the market is most liquid, most predictable, and most profitable for retail traders. 1. London New York overlap: 8 a.m. 11 a.m. EST, 1 p.m. 4 p.m. GMT. Highest volume. Most price action, best for major pairs like EUR, USD, GBP, USD. Ideal for scalpers, day traders, swing setups. 2. Early London open: 3 a.m. 5 a.m. EST, 8 a.m. 10 a.m. GMT. London banks begin trading, smart money enters. Institutional moves create clear trends. 3. New York open: 8 a.m. 10 a.m. EST, 1 p.m. 3 p.m. GMT. Wall Street opens: USD pairs become volatile, often reversals or continuation from London. 4. Tokyo London overlap: 3 a.m. for AM GMT, 10 p.m. to 11 p.m. EST. Minor but useful for JPY trades, low risk with trend setups. These periods offer tight spreads, clean chart patterns, and predictable momentum. Worst times to trade Forex, the deadly hours. Now let's discuss the worst times to trade Forex, the dangerous hours where the majority of beginners lose money. These periods are characterized by low volume, wide spreads, whipsaw price movement, lack of institutional participation. Here are the most deadly trading hours you must avoid. 1. Friday afternoon after 12 p.m. EST, 5 p.m. GMT. Traders close positions for the weekend, liquidity vanishes, spreads widen. Unexpected reversals can trap traders. 2. Sunday evening, first 2 to 3 hours after open. Market opens with gaps, no institutional trading. Brokers may widen spreads drastically. Volatility is random, not trend-based. 3. During major holidays, Christmas, New Year, Easter, U.S. Independence Day, volume is near zero. False breakouts and unreliable signals. Brokers still run platforms, but smart money is off. 4. Lunch hours between sessions, 12 p.m. to 2 p.m. GMT. London slows down, New York hasn't fully ramped up. Price gets stuck in narrow ranges. Often leads to choppy price action. 5. Before or after high-impact news like FOMC, NFP, CPI? Before, market freezes in anticipation. After, massive fake moves, whipsaws. Price often retraces violently before real direction forms. High volatility vs low volatility. Understand the trap. Volatility is a double-edged sword. While high volatility creates opportunities, it also raises risk. Similarly, low volatility means slow markets but can also produce false breakouts. Let's break it down. High volatility, good if managed well. Occurs during London NY overlaps, fast-moving trends. Great for experienced traders but risky for beginners without proper stop-loss. Low volatility, dangerous for most traders. Often in Asian sessions, difficult to catch breakouts. Leads to overtrading, revenge trading, low return for high emotional effort. Your job isn't just to find volatility, it's to find controlled volatility. That happens during session overlaps when both liquidity and momentum align. Time zone examples: EST, GMT, IST. Since Forex is global, knowing your session times in your local time zone is critical. If you're in New York, EST, EDT, Tokyo, 7 p.m. to 4 a.m., London, 3 a.m. 12 p.m., NY, 8 a.m. to 5 p.m., best overlap, 8 a.m. to 11 a.m. If you're in London, GMT, BST, Tokyo, 12 a.m. to 9 a.m., London, 8 a.m. to 5 p.m., NY, 1 p.m. to 10 p.m., best overlap, 1 p.m. to 4 p.m. If you're in India, IST, Tokyo, 5:30 a.m. to 2:30 p.m., London, 1:30 p.m. to 10:30 p.m., NY, 6:30 p.m. to 3:30 a.m., best overlap, 6:30 p.m. to 9:30 p.m. Tip: use time zone converters or trading platforms with session indicators to avoid confusion. How to build a daily trading routine. Successful traders don't just wake up and trade. They follow a disciplined routine that aligns with market structure, session timing, and personal rhythm. Here's a sample structure you can follow. Pre-session: 30 minutes before trading. Check economic calendar. Mark key levels, support, resistance, news zones. Review last session's trades. Set mindset: no overtrading, no revenge. Active session to 2-3 hours only. Choose 1-2 high-volume pairs. Wait for setups, don't chase. Use proper risk per trade, max 1-2%. Focus on quality, not quantity. Post-session. Close positions before dead hours. Journal trades, entry, exit, emotions, lessons. Walk away from the screen. By limiting your trading to 2 to 3 best hours per day, you'll reduce fatigue, avoid emotional errors, and perform like a professional. Pro tips to maximize profit with time-based trading. Let's level up. These advanced tips will take your timing mastery to the next level. 1. Trade with the banks, not against them. Institutions operate during London and NY. watch for volume spikes during those sessions. Follow structure, not random indicators. 2. Avoid dead hours even if you're bored. Boredom leads to overtrading. No movement equals no money. Focus only on high-probability setups. 3. Use news windows strategically. Avoid trading minutes before or after news, but trade after the dust settles with confirmation. Example: NFP at 8:30 a.m. EST, trade at 9 a.m. with structure. Use Forex session indicators. Add market session indicators to your charts. Helps you visually understand when markets overlap. Avoids costly time errors. 5. Respect your biological clock. Trade during your peak focus hours. Don't copy someone else's session if it ruins your sleep or mental health. Final thoughts: time is your edge. Here's what most beginners don't understand. You don't need more trades. You need better trades at better times. The Forex market rewards precision, not effort. A single trade taken at the right time with the right setup can outperform 10 rushed trades taken during dead zones. So always remember, time is a filter. Only trade when institutions are active. Time is a signal. If it's not your session, step away. Time is an edge. Don't waste it. Let's wrap this up with some concrete action steps. Use a session indicator on your chart. Identify your best trading time based on your local zone. Stick to the London NY overlap or early London hours. Avoid Sundays, late Fridays, and random Asian hours unless you specialize in them. Keep a journal not just of trades, but time of day for each trade. Track your profitability by session. You'll find your sweet spot. If you found this video helpful, make sure to like, subscribe, and turn on notifications for more advanced Forex strategies and proven trading routines. And comment below. What time do you usually trade? Have you noticed better results during specific hours? Thanks for watching Tradeverse Insights, where traders evolve.